If you're under contract to buy a home and you have a loan for that home, there are several things you need to make sure you do not do if you want to end up buying that home. And a lot of these things surround financial matters because when you are approved to buy a home with a loan, the lender is going to look at what's called your DTI, or your debt to income ratio. How much money do you make versus how much money do you owe? And when the lender looks at that, there's a percentage that you need to be under. And usually it's somewhere around like 40%. I'm not a lender though, so don't quote me. But each person's going to have a different required DTI because it also has to do with your credit worthiness. Do you pay your bills on time? Do you have a good credit score? Do you have a lot of assets? So here is a list of the things you want to be sure you don't do if you actually want to end up buying that house. First is you want to avoid any large deposits or withdrawals. The lender is going to be looking at your bank account in the beginning of the transaction, but also before closing to make sure that nothing crazy has happened. If you've got a lot of money coming in or going out, they're going to want to know where that money is coming from, mostly because they want to be sure that you're not getting a loan from somewhere that you're going to have to pay back. Another thing you don't want to do, don't change jobs. This is not the time to get pissed off at work and walk out. You need to make sure you keep that job, the same job, from the time you went under contract till the time you closed on the home. You want to get mad and walk out? Do it the day after closing. You do it before closing, they're going to do a final employment verification on you, and they're going to find out that you walked out on the job. Well, guess what? As far as they're concerned, you don't have the ability to pay your mortgage payment every month at this point. So they're not going to let you buy that house without a job. Third thing, do not open any new credit cards or take out any loans. Remember, they're looking at your debt to income ratio. If you have other loans that are taken out, or even credit cards where you have the ability to go charge a whole lot of money, that could change how much money you have at the end of every month after your bills are paid, and they want to make sure that you still are going to have enough money to pay that mortgage payment. So anything that gets added to your financial identity, if you will, regarding loans taken out or the ability to borrow more money is something they're going to look at, and it might serve as a flag that could end up denying your loan. Another thing, don't make any large purchases. Now, this means don't go buy a car or a boat or another really big purchase. But honestly, depending on how close that debt to income ratio is for you, if you're really close to that cutoff, even going and buying something like a refrigerator could be a problem. That $1,500 that you put on your credit card has now increased your debt to income ratio, and you may now not have enough ratio left to be approved for that house. So make sure you look at all your purchases and honestly keep it to like groceries. Anything bigger than that, you really want to check with your lender and be sure you've got enough margin to buy what you want to buy. Another thing, don't switch banks or move your money around. Lenders do not like to see that. It makes them feel like something might be going on. You're moving money, you're doing things with the money that they don't know about. They don't want to see that. Stick with the bank you're in. And again, just like your job, if you get pissed off at them and you want to leave and do something different, do it after closing, not before. This seems like a no-brainer, but if you've got other loans outstanding during your time when you're under contract, like even your car loan, make sure you pay your payments. If you don't, they're going to report that you didn't pay it. It's going to show up as a 30-day late payment. And the lender is going to find out about that, and it's going to give them pause. It's going to affect your credit score. It's at least going to affect your credit worthiness in the eyes of the lender. And they may decide, I don't know that this guy is the best guy to give a loan to, so maybe we need to pump the brakes on this. And lastly, don't change your marital status. Now, this means two things. Number one, don't fall head over heels in love with somebody and run out to Las Vegas and get married by Elvis at the Little White Wedding Chapel. But it also means don't decide that you don't like your spouse anymore and decide to divorce them. Both of those things can throw major hitches into real estate purchases. Believe it or not, all of these things are very common things that happen during real estate transactions because buyers just weren't told. So this is your PSA. If you're buying a home, don't do any of these things. Your lender, your realtor, and the seller will all thank you. And at the end, you won't be living in a cardboard box. So you're welcome.